All right, well, good morning, everyone. For those of you in the room, for those of you online, depending on where you're joining us, good afternoon, good evening. Thank you for joining us at ODI. Welcome to this half-day conference on fiscal policy and income inequality. My name is Francesca Bastagli, and I have the honor and the real pleasure to be chairing today's discussion. I am head of research at the Agnelli Foundation, but was up until recently a director of equity and social policy here at ODI. So we'll be today talking about one of the most current and hotly debated topics in economic and social policy, namely fiscal policy and inequality. And there are many reasons to be concerned about what's happening to income inequality in countries worldwide. We're seeing persistently high rates of income inequality in some countries, growing inequalities, and there are good reasons to be concerned for moral reasons, but also for more functional ones, if that's a concern as well. So in terms of, we know how harmful inequality can be for growth. So we know that taxes and transfers can be very effective in reducing income inequality. We also know that they can replicate, or even worse, sort of exacerbate existing inequalities. And these are the sorts of questions we will be looking at today. We know that governments can rely on taxes and transfers. It's one of the sets of tools they can use to directly try and shape the distribution and redistribution of income. But we want to understand better how they work. ODI has been working on this topic for a long time now. It mostly does two sets of things, really. One is to analyze, do research around the design, implementation, and impact of taxes and transfers. ODI also does a lot of work in country, working alongside governments and other actors to understand better and support the process of policy making, the constraints, the realities of designing and implementing policy. Today, we'll be asking ourselves two sets of questions, drawing on recent ODI research. One is around, so the morning is divided into two sessions. In the first part, we'll be looking at the evidence around the impact of income, of taxes and transfers on income inequality across the income distribution. In the second session, we'll be focusing on the question of gender inequality. So whether and in what ways fiscal policy influences gender inequality in terms of the gaps and differences in income between men and women. For each session, we'll start with a short presentation by the ODI researchers that have been working on the papers, on the recently published papers on these topics. And then we'll have a discussion, bringing in the panelists, expert panelists that have agreed to join today. And we're very grateful for those that have joined both in the room at ODI and online. We will then also open up to questions from the audience in the room. Also, for those of you online, please do submit your questions via the chat. I'll be taking them as they come through and addressing them, posing them to our speakers in the room during the Q&A. A quick word around of thanks, really. One is to those that are enabling, making this work possible in terms of the funding and broader support. So in particular, the Bill and Melinda Gates Foundation. Both of the studies, two of the studies we're hearing from today are made possible by their funding and support. And also much of the work is also done in collaboration with the Center for, this is for Tax Dev, I always forget the entire name, but the Center for Tax Analysis in Developing Countries, Tax Dev at the Institute for Fiscal Studies. And we have some colleagues from the IFS in the room today. So thank you to them. A word of thanks also to Hazel Granger, who couldn't be with us today, but is one of the leads or the main coordinator of this work at ODI. She's a senior research fellow at ODI. She's also obviously helped and took the lead on organizing the event. So shout out to Hazel. I hope to see you soon. So let me, I better stop talking. I'm absolutely delighted to introduce the panel. We have this is for session one. We'll start with session one. First, the two presenters, Laura Abramowski, Senior Research Associate at ODI and at the Institute for Fiscal Studies and co-author of the paper on fiscal policy and income inequality, which I hope you've seen. You will certainly find it at the ODI website. And Kyle McNabb, also ODI Research Associate and lead on all the work around employment income taxes on that data set, and co-author of the study on personal income tax that we'll be hearing more about. We then have online, I believe, Andara Kamara, economist at the African Development Bank. We have in the room Jukka Frutila, professor of public economics at the University of Helsinki and non-resident research fellow at UNU Wider, and Miguel Niño Zarazua, senior lecturer in development economics at SOAS at the University of London. So we'll start with the presentation by Laura and Kyle. I'll hand that over to you before we then open up the discussion. Laura.
Thank you so much. Thank you everyone for being here in person and everyone online for joining us to discuss these very, very important issues. I'm going to present very briefly our findings of reviewing evidence on the impact of fiscal policy on income inequality and poverty. It's a vast topic, and I'm going to probably simplify many things, but I hope it gives you some very broad idea and very good pointers of important issues to discuss in more detail later. So I want to start thinking about why income inequality matters. And I think Francesca already mentioned that there are moral considerations and social preferences that varies across countries. Some countries place more weight on societies being more equal than others. It also matters for political stability, and we have seen recently how income inequality can play out, generating instability in many countries, but also instrumentally, it can affect efficiency and economic growth. So there has been a long-standing belief that income inequality, some inequality or income inequality didn't matter for growth, and some of it was beneficial for economic growth among many economists and other practitioners. But actually there is increasing evidence that shows that high inequality may undermine economic growth, and actually we should pay more attention to this. Another important point I want to make is that fiscal policy is not a silver bullet to address income inequality and poverty, but it's still a very powerful tool, and how you design the system, both on the taxes and transfers point of view, and each instrument in particular and how they interact with each other matters a lot in shaping poverty and income inequality outcomes. So what we do in our report that is available, as Francesca said, online, and some hard copies here, is to review available evidence on the combined and individual impact of taxes and transfers on within country income inequality and poverty. So we are abstracting from cross-country inequalities, which are also very important, but we are not focusing on those today. We cover a large number of countries with very varying levels of income and development, and we aim to draw policy lessons, what it means for tax and transfers. Okay, so this is the only graph you will see in my presentation. I hope you can see it properly. So what this graph is showing is how the level of inequality before and after tax and transfers varies across countries. So the main point you can take from this graph is that tax benefits of cash transfers and in-kind transfers in education and health can reduce income inequality by a big proportion. And how do we read this graph is in the horizontal axis, you have a measure of income inequality before tax and transfers, and 0, the lower the measure, the Gini coefficient, the more equal the distribution of income is. And the higher, up to 100, the higher the inequality is. So we start with the market income Gini coefficient that is before any tax and transfers intervention today. And then we look at the Gini coefficient in final income after this fiscal policy. And what we see is that all countries that are considered in this study are below that diagonal line, which would mean if you are on that diagonal line, the fiscal policy wouldn't make any difference. If you are above, it's making it worse. If you are below, it's lowering income inequality. So all of them are below the diagonal line. It varies significantly across countries, even within country income groups. So the different colors of the dots and country labels represent what type of income group that country belongs to. And you can see there is a lot of variation. And that tells us that even within a given level of development, policy choices matter substantially. And that's something very powerful to take away. So you can change how you design the system and affect income inequality. So I'm not going to talk about the type of data now because we don't have a lot of time, but we can take it up if anyone is interested later. What I want to also show you is thinking about the different country income groups, how the contribution of fiscal policy to reducing income inequality varies on average across country income groups. So we see that fiscal policy has a larger impact on income inequality in the higher the income the country has. And we see the reduction in the Gini coefficient. So that table shows the proportional change. So in higher income countries, fiscal policy reduces that measure, the Gini coefficient measure of income inequality, a 22% reduction, whereas in lower income country, that is 8%, and there is variation in between. And this is related to the size of the state that I'm not going to discuss here in detail, but again, we can pick it up later, and how these different instruments operate across countries. So which type of instruments are we talking about, and how do they contribute to this reduction in income inequality, and how this varies across income groups? So we see that the redistribution is done by direct taxes, mostly personal income tax on earned income, and cash transfers and in-kind transfers. Here we are talking about services, education and health services provided by the government. And indirect taxes and subsidies have no effect when considered as a whole. One very important point that we need to take into account when thinking about fiscal policy and how it affects income inequality and income poverty is that changes in inequality don't always mean changes in poverty levels at all. And in several countries, net payers to the fiscal system start in the extreme poor or poor income groups. And that's quite sizable in lower income countries. It's something that Kyle will pick up after I finish this presentation, and will zoom in on his work on personal income tax and how this affects income inequality in African countries. But many poor pay personal income tax, and that's because of how it's designed, and it can be changed. And you don't have good system to compensate them through the cash transfer. So that's something that potential for improvement. What I have done here, and I don't think I have time to go into a lot of detail, but I just wanted to give you a flavor of what we discuss at length in terms of evidence in the report, is to think, okay, so fiscal policy is a powerful tool, and what are the different instruments we have on the taxes and on the transfer side, and how we can think about them to improve progressivity while also thinking about revenue collection on the taxes side. So as I said, personal income tax, Kyle would talk about it in more detail. Corporate income tax is something that is very difficult to model how this, who pays in terms, which individuals or households pay ultimately corporate income tax. There are increasing number of studies, and the evidence is inconclusive, but this is a very important instrument as well in terms of generating revenues for government, and also in how it interacts with personal income tax and how people at the top of the income distribution may choose to operate legally to pay, decide whether to pay personal income tax, the top rate, or corporate income tax, where usually it's lower. And this is generating a lot of debate. Again, we can pick it up at a later in the discussion a bit more, but something that we need to be thinking about as well. We discussed property taxes. The evidence varies in terms of whether it's progressive or regressive, and it depends a lot on how this instrument is implemented. It has potential to be a progressive tax that is efficient, but you also have to think about how you implement it in a way that doesn't impose a high burden on income poor households today. So there are a lot of parameters one has to take into account when designing and implementing property taxes as well. One last thing I would say about taxes, how many minutes do I have? Yeah. Well, I have more things to say then. So in terms of value-added taxes, so the evidence in terms of impacts on income distribution, not on consumption expenditure distribution, but on income, is that it is regressive, and it also affects poor households more and make them poorer. But actually this is not so much the case in countries where there are very high levels of informality in consumers' markets. So there is very often the case that most of the people on lower income households in non-high income countries purchase their goods and some of their services from very informal, unregistered businesses. And hence the incidence of VAT there is quite different to the incidence of VAT in countries where most of the consumers purchases from VAT register. And this has implications for how do we think about VAT and its regressive and impact. But at the same time, VAT is a very powerful source to collect, to raise revenues, and can be a very powerful, very important in terms of financing more pro-poor progressive spending. And I will come back to this at the end, at the importance of taking the system as a whole. Excise, there's a lot that can be done. It's not clear. It depends on the good and the consumption patterns across the income distribution of who is consuming more or less these goods. And there are many areas for improvement and to use better these taxes to tax socially harmful goods like tobacco or fuel, even transitioning from fuel subsidies to fuel taxes to tackle environmental costs. There is also issues with custom. I don't have time to go through that, but we can talk about it later. And in terms of cash transfers, so cash transfers are in all the evidence, in all the contexts, shows that it is progressive, it's equalizing, and it's lowers poverty rates. But of course, it will depend the actual impact and whether there is room for improvement on the context, on the size of the cash transfer program, on the ability of the government to be able to target lower income households or not, on the decision of whether to make these cash transfers universal or targeted. So for example, from what we have reviewed, it doesn't, even though universal transfers seem very attractive for many different reasons, social justice, but also in terms of social insurance in a world where work is becoming much more volatile. It's not clear that countries are ready yet to provide and finance universal cash transfers in a sustainable way. And so given these resource constraints, it's important to think that maybe it's better to start with targeting to those most vulnerables. Indirect subsidies, again, vary a lot, the impact. They usually are not well targeted to help the poor. And there is a lot of debate about how you think about packages of reforms where you remove these subsidies, and if you are affecting lower income households, compensate them at the same time with cash transfers. In higher income transfers in general are progressive and pro-poor, and in non-higher income countries, there is a lot of room for expansion of access and of quality of the services to improve outcomes across the income distribution. So what are the main takeaways? I would say indirect tax remains an important revenue raiser, and the design and implementation can be improved along many dimensions that I haven't mentioned in detail, but never mind, we'll again discuss probably later. There is this perceived trade-off between revenue mobilization and equity that is not helpful. And there are benefits of more progressive income taxes and protecting the corporate income tax base and revenues. There are benefits from increasing excise duties to tackle health and environmental externalities in ways that are good for economic growth, development, and income inequality. As I mentioned before, it's important to think about packages of reforms. So for example, use cash transfers to compensate losers when removing inefficient fossil subsidies, for example. And it's also important to think about tax systems. So thinking about policy, but also thinking about administration and how these two interact with each other. I think this is my last one. One very important aspect we emphasize a lot in our report is the importance of bringing taxes and transfers together when thinking about how to tackle income inequality and poverty using the fiscal system. So not every instrument has to be equalizing pro-poor on the tax or on the spending side. We have to think about the system as a whole and the net impact of the system on these outcomes. And this matters a lot when thinking about how to raise revenue, encourage economic growth and development, but also tackling income inequality at the same time. And this relates to this idea of the whole of government approach. So it's important that these type of decisions are not taken at the government level in silos without policymakers talking to each other. So it's important to try to think how this type of debate can facilitate a better dialogue between the different parts of government to achieve shared goals as a whole. There are, of course, issues about political economy and how we need to think as practitioners and policymakers, academics, researchers, how do we engage with those challenges that are sometimes left on the side when talking about quantitative evidence, for example, and they are really, really important to consider when thinking how to go from research to impact. The other very important issue to consider is social contracts. So we have been talking about taxes and transfers and how citizens engage with the state. And I think this, in many countries, particularly lower income countries, but increasingly as we have been seeing recently in higher income countries, there is there are issues of trust and there are issues of lack of transparency and accountability between the citizens and the state. And for all this to work, we have to, there has to be a level of trust between citizens paying money into a government that is going to be used well for the purpose that governments say they are going to be using it. And so there is very high need to improve those institutions and everywhere, but I think in some countries more than others. And in doing so, I think it's important also to use consensus and foster this consensus through communications, through a lot of work with stakeholders that are part of this policy decision-making process. Thank you.
Thank you, Laura. Wonderful. Thank you for the very clear overview of the evidence and then of the policy implications that are emerging. We'll be coming back to many of these issues, I'm sure. I'll hand over to Kyle to hear more about the personal income tax.
Thanks very much. Can the slides come back so that I know what I'm talking about? So Laura's obviously given a really good overview of the sort of system of taxes and transfers and how each of those instruments contribute or don't contribute to the reductions in income inequality. The work that, is the clicker working? The work that I'm going to talk about sort of very much zooms in on one of those instruments, and that's the personal income tax. And specifically, it zooms in on the personal income tax in African countries, and that's a region where we know comparatively less about the effects of each of these sorts of instruments on income inequality. When you think about the personal income tax and its capacity or its potential to affect inequality outcomes in lower or middle income countries, you might think about things like the fact that a lot of people earn very low incomes. There's large amounts of informality, which means inversely a small formal labor force. Revenue authorities that maybe don't have the administrative capacity to administer that tax on large swathes of the population. And all of those are very valid concerns and very valid reasons for why the personal income tax perhaps isn't as effective an instrument in low and middle income countries at tackling inequality as it is in other parts of the world. What we focus on is sort of a fourth sort of facet of the personal income tax, and that's the way it's designed, or the policy design, as in what does the rate structure look like, where's the tax-free threshold set, et cetera, et cetera. And we wanted to ask, how does the policy design affect the capacity for the personal income tax to be an effective redistributive instrument in African countries? This is really important for a number of reasons. For example, to ensure that those on very low incomes are not taxed heavily. In some work we did last year with Hazel, we found that in 1 in 5 countries in this sample, if you were in a formal sector job and your salary was less than or equal to the $1.90 a day poverty line, you would still be taxed on that salary according to the design of personal income taxes. It's also important to ensure that those on higher incomes are taxed appropriately, and that perhaps involves striking a balance between raising revenue from those on high incomes, but also not creating large disincentives for them to hide that income, to restructure it, et cetera, et cetera. So what we do is we combine data from a data set, the employment income tax data set that we put together through TaxDev and at ODI, with data on income distributions from across African countries from the World Inequality Database. And we essentially simulate what if we apply the personal income tax to the income distribution in each country on the African continent for roughly the last 2.5 decades. We find that by design, it is pretty progressive, but there's definitely room for improvement. So there's a wide range of results. And we find that in, I think Somalia is the country where it has the smallest effect, or we find the smallest level of progressivity, to Cote d'Ivoire, where we find a reduction of inequality of about 17%, and that's a proportional change in Gini coefficient between the pre and post-tax Gini coefficient. So we model the redistributive capacity of the tax by design. So we have to make a few assumptions in the work that we do, and obviously things like informality and administrative capacity and top incomes, as I mentioned, are very important reasons for why, in reality, the tax may not be as redistributive as some of the simulations we make. But when we start to decompose those effects, we find that what seems to matter most for ensuring that the personal income tax is an effective redistributive instrument is the level at which the top rate is set and the point in your earnings where that applies. Crucially, one of the major findings that came out of the work that we've done is that when we've studied reforms to the personal income tax, so this data set allows us to observe every time there was a change in the legislation around what the personal income tax looked like. We find very strong evidence that on average reforms during this period have actually lessened the ability of the personal income tax to be a redistributive instrument on the African continent. So to show you a very quick example of that on the screen, this is only one graph I'm going to show you. It's a scatter plot that shows the difference between pre and post-tax inequality in Cameroon. I'm not picking on Cameroon specifically. It's not the worst offender or not the only country in the sample where this comes out. All you need to know here is that the lower the dot is for each year, so from left to right goes from 1995 to 2020, for each year, the lower the dot is, the more equalizing is the effect of the personal income tax by design. In 2003, Cameroon reformed its personal income tax. It lowered the top rate, it reduced the number of bands, and a number of other things were changed. And what happened was, according to our simulations, the redistributive capacity fell quite drastically. And this is very typical of what we see across the sample time and time again, and that reforms have pointed in this direction, making by design the personal income tax a less effective instrument at redistributing across this sample. So it's an incredibly rapid run through some of the results that we've taken out. In terms of conclusions and setting this in context against what Laura has already presented, looking at the policy design of the personal income tax, that's just one feature on one instrument in the whole sort of system of taxes and transfers. But we think it's an important one, and it can have significant impacts on inequality and even poverty, and that's even in the face of high informality. It's very likely that in a lot of low and middle income countries, they may have taken the decision to just design a simple personal income tax to raise as much revenue as possible. And should there be government preference for redistribution through cash transfers, et cetera, they may have focused on that. You definitely don't have to achieve all of your inequality reductions with the personal income tax. It's just one instrument. But we do sort of feel that there's a few guiding principles that could probably be adhered to. So for example, ensuring that the personal income tax by design does not make the poor poorer. So someone on a very low income, should they have a formal job offer, perhaps it's not a great policy design if they are taxed on that income. Also, as I mentioned before, adequately taxing those on top incomes, trying better to strike that balance between collecting as much revenue as possible, but not creating huge disincentives for that income to be underreported. Thank you very much.
Thank you, Kyle. Thank you for this review of the personal income tax and of some of the issues and sort of tensions or trade-offs that one faces around questions of the design and then the impacts of personal income tax. So we've heard from the researchers and about the recent work that's been going on. And I'd like to now pass on to our distinguished panelists. We also have Andara online. Welcome. Good to see you. So we can see you on the screen. But I'll start first. I'll turn to Miguel. Just coming back to a broader question around, based also on your work and building on what you've just heard, if you could talk us through again, or anyway, going back to your work, talk us through where you think, in which countries or which regions progress has been made in making fiscal policy more progressive, and using what policies or channels.
Yeah, thank you, Francesca. So can I just maybe share some slides just to make the discussion a bit maybe easier for everyone to follow. So let me just go ahead. I will look at my screen because I don't see anything there. But I just wanted to show you this chart, which in a way simplifies the way in which different policies impact inequality. So there are different levels of inequality. And of course, we have been discussing very much final income inequality, which is after taking into account social services, transfers, and taxes. But in fact, different policies affect income inequality at different levels of the concept, right? So in the next session, we will be discussing the issue of gender. So it's very important to also look at how, for example, labor policies and education policies as well impact redistribution and inequality at different levels of the concept of income inequality. So, of course, we've been discussing how transfers and taxes impact final income inequality. And here the chart in a way tries to explain the channels, the direct channels and the indirect channels. The indirect channels that are shown by the dot lines, in a way explain the behavioral effects that these policies have on inequality. But now, after going through these basic conceptualizations, we can see in this table, for example, how the Gini coefficient is affected by different concepts of income inequality once you introduce different policies. No? So if you look at, for example, this chart, we move from market income inequality before taking into account, for example, education, labor market policies, taxation, and redistribution through transfers. You see how inequality goes down to final income, which is the way in which normally we get our money, right? So after taking into account all the services that we receive, as well as after paying taxes. And you will see in this chart the percentage change from final income to market income. No? So you see the countries that have made in the last round of data that we have the, let's say, the largest progress towards reducing inequality, no? Through different policy instruments. And here we have Argentina, South Africa, usually middle income countries, right? So you can see that. And just maybe focusing a bit more on Argentina, you can see different kind of policy designs that they implemented over the years to tackle high income inequality. And of course, if you look at the Gini coefficients, are still really, really high compared to other high income countries. So nevertheless, for example, they implemented, for example, a number of tax brackets and adjusted income tax rates that have an impact on reducing income inequality. So also implemented some changes to corporate taxation, also implemented some adjustments in income thresholds and rates of Social Security contribution. And also they have done some work on tax evasion policies, which is something that we haven't discussed so much, but there are massive tax gaps in these areas. No? So there's a lot of tax evasion and tax avoidance in developing countries. And if we look at this table and just compare the country that has made the most progress on these areas and the least one, which is Guatemala in our sample, you can see by looking at the composition of the concentration shares of different components over the income distribution. If you divide the income distribution by deciles, you can see how different components of taxes and transfers have impacted income inequality. No? And you can see here so how, for example, indirect subsidies benefit the better of households, which is something that we haven't discussed much. You know? So it's not just about taxation and expenditure, but also about how subsidies, which tend to be in many contexts highly regressive, as you can see in both contexts here. No? And for example, health expenditure is highly regressive in Guatemala, whereas in Argentina tends to be more progressive. No? So there are a lot of elements that contribute substantially to the way in which countries have seen success in reducing inequality. But one of the final things I wanted to mention is that if you look at personal income tax, which has been discussed extensively now, in fact, if you look at the history, not just the last decade, but you look at the history of the trends of personal income tax, across the board, personal income tax has been on the decline. No? So there have been efforts to increase personal tax income in certain contexts, but still overall, there is a massive reduction in the tax rates. And this is something that, yeah, I just want to put on the table. Thank you.
Thank you very much, Miguel. And Dara, turning to you, a similar question, based on your experience in your work in Ghana and now at the African Development Bank, whether you could talk us through some of the opportunities and areas for potential for governments in African countries to strengthen the progressivity of their tax and wider fiscal system, taking into account the kind of trends that we've already heard about and also tax gaps that we've heard about by previous speakers.
Okay, can everyone hear me?
Yes.
Perfect. For me, there are 3 policy opportunities that could be potential areas for the Ghanaian government to look at as part of measures to strengthen, the progressivity of the tax system. And I'm going to, for me, it's a 3-pronged approach. So I'm going to be talking about broadening the tax base, property taxation, and high net worth individuals. So Ghana has a population currently of over 30 million people. And in this population, less than 10%, which is 3 million people, pay income taxes. And over the last few years as well, personal income tax revenues haven't increased relative to GDP. And this is obviously highlighting the challenges of improving tax enforcement and compliance on individuals in a highly informal economy like the Ghanaian one. And this has also led to an increase in the tax gap. So what I propose is that financial inclusion measures should be vigorously promoted within the informal sector to make a lot of entrepreneurs in that sector bankable. Because if firms are saving with banks, they are more likely to pay tax, and that is going to contribute to lowering the tax gap. Additionally, Ghana has a very high mobile phone penetration. So the Revenue Authority can also consider partnering with telcos, so that mobile phone technology, mobile money technology especially, can be deployed in the collection of taxes. And this is good because it contributes to expanding the tax base. And for property taxation, currently, Ghana doesn't have a property tax because we operate a property rate system. And this system is administered by our local authorities, which are known as metropolitan, municipal, and district assemblies. And the collections from this are not part of central government's revenues. So the tax base is also assessed by the Lands Commission, our Lands Commission here. So the challenges, some of the challenges the MMDAs face is having the limited technical capacity to administer these taxes. First of all, they don't even do the valuation of the taxes, and then they don't have enough staff to even collect these taxes. So there's an opportunity to transfer the administrative responsibility of collecting these taxes from the MMDAs to the Revenue Authority, because GRA, apart from having the institutional expertise to facilitate the efficient assessment, billing, and collecting of these taxes, also is mandated by law, I believe, to advise the MMDAs on their assessments and the collection of their revenues. And I feel like this would be a good thing because it's going to contribute to central government's revenues if the Revenue Authority starts to collect these property rates now. My third point is on high net worth individuals. So there's a lot of growth and profitability in sectors such as the extractives and the financial services, right? But as I said earlier, personal income tax hasn't increased in the same manner as the growth in these sectors. So currently our top marginal rates for PIT is 35% for incomes exceeding 600,000 cedis annually. And I believe 600,000 cedis is approximately 41,000 pounds. I mean, I could be wrong, but I will check. So the Revenue Authority has set up a high net worth unit, which is focused on identifying high net worth individuals using information from institutions such as the Revenue Authority itself, our Controller and Accountant General's departments, the Registrars Commission where people register their businesses, the Lands Commission where people register their lands, and then our Driver and Vehicle Licensing Authority where people register their cars. And GRA is trying to use the information gotten from these institutions. There are many other institutions, I'm just mentioning a few, to identify high net worth individuals. So unfortunately, the challenge here is that there's not a lot of administrative tax return data all the time. So you can't even identify people properly. And if you can't identify someone, how do you say they are high net worth and then make sure they are paying the amount of taxes they are supposed to be paying? And then in cases where we also have data, the data is so fragmented, so you can't even triangulate it and say pinpoint who is a high net worth individual. And the triangulation is very important here because a lot of people's wealth in Ghana is not always in the banks. People have wealth maybe land-wise. So you want to be able to say who has what, so you are able to know if they are paying their fair share of taxes. So maybe a solution here would be for the Revenue Authority to digitize tax returns and then maybe probably employ big data analytics in the triangulation of data so they are better able to target high net worth individuals. And Laura spoke about transfers in her presentation, so I wanted to touch briefly on that as well. So in a place like Ghana, transfers have a very mixed distributional impact. And I'll give an example of one of the progressive ones we have here, well, supposedly progressive ones we have here. It's called LEAP, which is the Livelihood Empowerment Against Poverty Program. And it's progressive in that it targets the bottom 20%. But then the foundation of any efficient and effective cash transfer scheme, right, is that you want a system that has good identification and an addressing system. And without that, you are not able to target the people who are most vulnerable and who are most in need of these kind of transfers. The Ghanaian economy is very highly informal. So a lot of people in the informal sector where the most vulnerable don't have addresses, and they are in a lot of ways also not connected to the financial sector. So if someone is not connected to the financial sector, how are they supposed to receive any kind of cash transfers from government? Having an ID and an address and being part of the financial system are interconnected. Unfortunately, we don't have that on a large scale now. So what government does here is mostly a blanket pro-poor intervention. And examples of these are the free senior high school intervention we have now. And then we've also got a free national health insurance. And these interventions are great, but then the issue is that they just don't target, they target everyone and just don't actually target the people who are most in need of these kind of transfers.
Thank you very much. Thanks, Azar. Very interesting and helpful to hear about the Ghanaian experience. So turning to you and coming back to the personal income tax story. So we've heard about some of the constraints that particularly low-income countries face linked to low incomes in terms of its capacity to use personal income tax, but also potential opportunities like we've just heard from Mandara to try and tax better, high net worth individuals. So opportunities there. Based on your work and experience, what are the options and opportunities going forward, and what are the alternatives if low-income countries cannot for now rely on personal income tax?
Yeah, thank you. And by the way, thank you also for this excellent report. I very much agree on what was said there. So first on the personal income tax. So yes, I agree, it still has a role to play. And I have an example from Uganda where some 10 years ago, the Ugandan government increased the progressivity via lowering the tax rates on the lower middle income earners, and then increase the top tax rate from 30 to 40%. And together with colleagues, we examined the impacts of this on reported incomes, because the worry can be that because of higher tax rates at the top, then the top income earners would be reporting lower incomes. And after the empirical analysis, we found out that the reform was actually successful in terms of reducing inequality mildly, and it also raised the revenues that the government collected. So even after taking into account these behavioral reactions, so that the fact that the revenues can react, we found that the current 40% top tax rate is not about the revenue maximizing one. So I suppose then the general message is that the countries which have lower rates could perhaps consider raising those. And the second point I would like to make is that I would like to repeat the point made by Laura earlier, that it's the entire package that matters. So cash transfers are very effective in reducing poverty and inequality, even if they would have to be financed by indirect proportional taxes. And they don't always have to be targeted in a very fine-tuned proxy means test manner, because there's research showing that even simple targeting, like categorical targeting, meaning that the transfers would go to households with certain demographic groups, like households with young children or households with older members, can be almost as good in terms of poverty reduction as proxy means-test transfers. And also now, in the aftermath of the pandemic, we know that the crisis can actually change the profile of the poor. And if that happens, then that's an argument, other things equal, for a little bit less targeting in the first place. And finally, the third point I would like to make is also something that was mentioned in the slides or on the slides, and that's related to broadening the tax base by making avoidance and evasion harder. And the way to do this is, in a sense, a kind of technical fix. So better utilization of ICT, more third-party reporting via banks, for example, that the information is then shared by the revenue authority, and then there's an alternative route to information to what the taxpayers pay. So all this can actually help raise revenues, make the tax base broader. And technical assistance there by revenue authorities who have been doing this for a longer period of time can actually be also helpful in terms of speeding up the process in lower and lower middle income countries to improve the tax base.
Thank you, Yuka. So some very promising options and opportunities here. I want to take another round of questions before we open up to the audience. But in the meantime, for those of you online, please do submit questions if you have any via the chat that I'll pick up in a minute. But just a round of questions to our three speakers, and going back first to Andara, around the issue of distributional analysis and the utilization of the findings of distributional analysis. So there are questions around the methodology and empirics of estimating the incidence and impact of alternative tax and transfer tools. Many of us are well aware of the kind of challenges we face, both from a more theoretical perspective and the reality of the data, for instance, on the ground. Could you talk us through in your experience, so for instance, in the case of Ghana and your work there, around your experience in promoting and supporting distribution analysis, the sort of findings that emerge, and whether, and if so, how findings were used by the government there?
Yes. So I'm going to start with a quick overview of the kind of distribution analysis model we had. So the tax policy unit introduced the analysis so we could better understand the impacts of tax policies on different types of households. And this was because we wanted to propose tax policy prescriptions that were aimed at raising revenue in ways that were equitable, efficient, and had the least distortionary effects. So the micro simulation that we developed to do this is called GATAX, and it facilitated the analysis of distributional impacts of tax policies on households ranging from the poorest to the richest in 10 different deciles. And GATAX covers a little over 76% of tax revenues in Ghana and selected cash benefits which are paid by the government. And the data that underpins the GATAX model is the 2016 and 2017 Ghana Living Standards Survey, which is a household survey that collects disaggregated welfare and living condition statistics. And the model also uses the 2015 social accounting matrix, which provides an overview of Ghana's production structure. Some of the assumptions that were built into the model included a constant level of tax compliance, if I remember correctly, for all households. And then also, we didn't have any behavioral response or in consumption or production in the model. And what the model did for us was that it produced revenue and expenditure analysis and impacts of tax reforms relative to a certain baseline that we had in the model. And also for the impact of on households, it produced changes in tax and benefits, both in cash and in proportional terms across the different income ranges by region, household composition, and if the household was rural or urban. So one of the main challenges we had with the GATAX was it included the uncertainty around the data that we're using. First off, GATAX wasn't able to model in-kind transfers. as I mentioned earlier, much of the revenue raised by governments is distributed in other means like instead of cash. So we have like public health, like the NHIS, as I mentioned, and then education, which is a free SHS, free senior high school. The distributional impacts of expenditures, they are very crucial for understanding how progressive a fiscal system is. And GAR tax focuses just on the revenue raised. The uncertainty with the income tax data was that our main concern was the quality of the data for some of the observations because of misreporting in the raw survey data, which underpinned the model we're using. And the thing with misreported data is that a huge outlier distorts the kind of results you get from, it has an overall effect on the taxes. So although the aggregate assumptions the default assumptions do well on an aggregate, the uncertainties, we needed to keep them in mind when modeling direct taxes so that we don't overestimate or underestimate the progressivity of the system. And then another thing was that we also assumed informality was constant across households in all sectors. So there was a lack of data on whether indirect taxes are paid on household purchases, whether this means like it simplifies the assumption. And this led to some distorted distributional, patterns, unfortunately. So if an example of this was if poor households were more likely to, if poor households are more likely to purchase from an informal sector and not pay VAT or NHIL, which is VAT or National Health Insurance Levy, the tax incidence results in GAR tax was underestimating how progressive the VAT or NHIL was in the model. So the model was actually well received by policymakers, and I'm happy to say that we still use it. It's still used. I don't work there anymore, unfortunately. It's used every budget cycle to estimate the potential impact of tax policies before they are considered for input in the budget. And I think the most recent example of when it was used was when the VAT rate was increased recently from 12.5 to 15%. So the VAT rate was increased by 2.5% in the 2023 budget. So the distribution analysis that came out of doing the simulation was that the VAT would be mildly progressive in that even though the increase did have an effect on poorer households, Ghana has a range of VAT exemptions that apply to raw foodstuff and pharmaceuticals. And the mild impact on poorer households was reflective of the fact that poorer households spend relatively more on food products and health and goods and services, which are mostly exempt in our VAT system anyway. So the VAT, I'm happy to say, after using the model, was the policy was passed, the policy reform was passed, and currently Ghana's VAT rate is 15%. So yeah, the distribution analysis was very good in estimating how taxes impact people, and it also made a difference for whether the policy was going to be in the budget or not. Thanks.
Thank you. And so Yuka, turning to you in the Southmod model, could you tell us a bit about that and whether there's been demand for it and use of then the findings that have come out of studies using that model?
Yes, so Southmod is a family of tax benefit microsimulation models that is coordinated by UniWider, and most of these models are freely available for research and analytical purposes on the web page. So I'd like to raise 3 examples on how the analysis has been used to formulate policy. So the first is again from Uganda, and Uganda, like many other developing countries, also administers what is called a presumptive tax on the small businesses. And there was a reform for this turnover tax system in 2020, and it was the Ugandan government asked us to do an analysis of the impacts of this reform on the basis of UCAMOD, which is the tax benefit microsimulation model for Uganda. And the team found out that the reform led to a regressive tax system within that group of taxpayers, and then they used the model to generate an alternative one that would raise the same revenue, but with a simple structure with just a couple of progressive tax bands. So that was how it was used there. The second one is from Mozambique, where the model was used to simulate the impacts of an expansion of child benefits, and that was a very simple analysis that was conducted by a team consisting of a member, a staff member from the ministry, and also there was a UNICEF expert present. So there it was used to then influence the political decision making to expand this child benefit in, I believe, 2022. And the third one is from Zambia, where the government of Zambia asked us to help them to examine the impacts of a new cash plus transfer program that they or system that they were contemplating. And so what's cash plus? So that consists of harmonization of the various benefits that the government has, and then also implementing a floor benefit level, and that was used to then evaluate whether that benefit package would be successful in reaching the government's objective of reducing poverty by 20%, and the analysis showed that yes, it would contribute towards that poverty reduction, but it would only go halfway. I believe then the general message rising from both the Mozambican and then the Zambian simulation is that in both of these cases, the poverty levels, the poverty is so widespread and deep, so that these sort of expansions of the cash transfer systems, yes, they do help, but they are nowhere near to solving the poverty issues with the resources that are currently available for them.
Okay, thank you, Luca. And Miguel, turning to you, and we've heard about the different types of models, like for simulation instruments, and how they've been put to use and informed policy change. Based on your experience, what are some of the gaps, evidence gaps, and what tools could we be strengthening to help us understand and inform and guide policy to make fiscal systems more progressive?
Well, one of the things that we suffer on a daily basis is in many contexts, the availability of data is very limited. So, for example, all the data and the tables that I just showed are based on income. So we have very limited information about wealth, for example, which is another component. And if you think about any model in which you look at the contribution of wage income vis-a-vis profits, at the contribution to GDP, you will see that over time, the contribution of profits has been growing up because of the way the financial system and in the way the economies are structured. And we really don't know so much about how wealth has been not only accumulated in terms of the way it's been used, and also how we can better tax those revenues. So, and that really relates to the issue of tax evasion and tax avoidance, but also the fact that we really don't know too much about the distribution of wealth. It's been improving, but for example, if you want to do some rigorous analysis, I can name the countries that in developing countries you have access to wealth. So the other thing is we really don't know so much about the heterogeneous effects of fiscal policies, both tax and expenditure. So, and these effects are heterogeneous by different groups. Can be by gender, by age, by different, by race or ethnicity, and these are related to historical and initial conditions. So we don't really know so much about this, especially in low and middle income countries. And also, most of the evidence that we know so far relate to the short-term effects of different policy interventions. So we know a little bit about how certain policies have affected behaviors and also improve or reduce our ability to deal with inequality, but in fact, we don't really know so much about the longer term effects, the dynamics effects that those policies can impact on the economy. So there is also a lot of gaps in these kind of areas. You know? Yeah.
Why, thank you, Miguel. So let me open up to the audience if there are any questions, including the audience online, but I'll first have a go see if there's anyone in the room that has any questions. You could perhaps briefly introduce yourself.
Okay.
Thank you.
My name is David Navina. I work for the Nigeria Governors Forum. I'd like to first thank Laura for her presentation. I think it's really apt at the height of sovereign debt distress today for many low-income countries. The question would be, what would be the best fiscal instrument to address, social protection given the rise in inequality and poverty? Well, there are two specific questions actually. How did you manage, like Miguel said, I think that has been in my head since you started the presentation, the heterogeneity of one, taxes. Andara mentioned 10% of the population in Ghana paying taxes. So there's a huge population outside that. So beyond formal institutions, there's a huge population outside that group that's not captured. Informality, of course, if you look at 40 to 60% of the population, how do you manage, the nuances between taxes with a small group, of course, formal data, and transfers impacting a larger population outside, including those outside the tax net. And the second concern would be, which would be actually the most optimal fiscal instrument. You mentioned subsidies with zero impact. There are also taxes and cash transfer, but the concern with cash transfer is what is the optimal cash and what is the optimal target population, and even given the fiscal headroom you have, and the spread of poverty, do we really see cash transfers as really as an effective tool? And of course, there are other issues around location, culture, and some of those issues, and even the administrative capacity, who's administering the cash transfer, what data informs that, is the ministry or the tax authority? I mean, there are lots of issues there. Hopefully you can throw more light on some of those things.
Yeah, lots of questions there too. Thank you. We'll maybe have a go at answering some of them. That can also point you then to studies that have dealt with many of these questions, because these are very detailed questions. Are there any other questions in the room before we can come back to answering that? Sorry, could you pass the mic? Oh.
Okay, thank you. My name is Flora Miamba. I am from Tanzania, an expert on the issues of social protection and gender. And thank you for the presentation. I have a question on how, when you're calculating this impact or effects, like for countries, like developing countries, most of these cash transfer program, for instance, the financing is largely like donor funded. Like in my country, we have a huge national level social protection, social assistance program, which has the cash transfers, public works, and all that. And I'll speak of that sometimes later. But for now, the World Bank is financing it as a loan to the government. And the government is saying, yes, this is paid through people's taxes. And so, and they're paying at whatever, like as a loan, soft loan for like long period of time. Now, when we're calculating these effects, how does that work when it's not like direct taxes coming now from the citizens? It's a loan to the government paid later. How does that work? That puzzle has always been a problem to me, but I have also wanted to just like contribute from a study that we had conducted a few years back in Tanzania on the taxes and citizens' willingness to pay taxes, the issue of trust. So findings indicated, just in support of what you had presented, that citizens are happy to pay taxes faithfully if they know that the government is spending on some tangible projects that they can see. Otherwise, in my country and in many developing countries, the tax system is quite loose in terms of managing it, people evading taxes. And they said, if we know where it's going, we are happy to pay. Otherwise, if we don't, we can then kind of evade paying taxes. So when the conclusion came to say some innovation or innovative strategies, you mentioned an example of taxing some behaviors like cigarettes or like tobacco. And so that came in my mind to say, now it depends. You can innovate and do some of these additional taxes, but if that is not clear on retaining it and transferring it into productive projects, then it will be kind of a waste. So there has to be more that has to be done in terms of saying, we are doing this strategy, but we need to make sure that we are addressing some of the issues, like making the strong tax system so that this solution can work. So that's a contribution, not really like a question. Thank you.
Thank you, Flora. So I think we'll come back to the speakers. I think we'll address these questions directly to the panel. I mean, we'll take turns in answering. Perhaps first Laura and Kyle, and then I'll pass to Andara before we go to Miguel and Yuka. But just coming back to questions around incidence analysis and the kind of assumptions that need to be made. We've heard a bit about this already, but you might want to come back to some of those questions. And then wider questions around different types of instruments, the administrative considerations around these. You might want to point to references that exist to that. There's a question online also around the Ghana microsimulation model. So some of the technicality aspects. So we can then perhaps put you directly in touch to discuss some of the details around these tools. And then the somewhat political economy type question of coming back to the question of the social contract, willingness to pay tax, and that potential sort of virtuous cycle between tax, public services and public provision of services, and trust and willingness to pay tax. But Laura, I'll hand over first to you if you could all briefly address a selected set of these questions.
So I think I touch on different points raised so far. So I think the point about how do we go from getting revenues from 10% of the firms and 10% of the workers in a country and aiming to finance cash transfers to people that don't pay taxes. I think it's a really important one. It relates to social preferences, to many different factors affecting this, and thinking about this problem dynamically as countries grow and how they grow and how they develop their institutions and their social contracts. So I think to some extent, some of these countries have economic structure that means that a lot of these workers work in firms that are very small. They are not very productive. They earn very low wages. And ideally, as countries develop, firms will become larger, more productive, will pay, and will become a better withholding agent of the revenue authority to tax workers. So as long as these workers earn enough income to be paying income tax, so that they are not poor. So I think the transition to that is tricky, it's difficult, as we all know. And I think it's important to have the bigger picture in mind and try to think where you're going and try to build the tax base, the social contract for today, financing cash transfers for people that are very poor. And it is difficult, we know it is difficult, but I think it's something that we have been debating because we don't think it's very fair that some people are capture so much of the income and they do pay a lot of taxes, but they also accrue a very, I didn't show these figures, but like they account for a very big share of the total income generated. So these are discussions we have to continue having and building consensus and ways of growing, how we grow, how we distribute this growth, and hence the tax base will change and people will start paying more taxes across the income distribution. Having said that, in many lower income countries, many households and individuals on the lower part of the distribution end up paying taxes, as we discussed before, even personal income taxes, and the effective tax rates sometimes are higher than for people at the top. So this is also something to consider. I won't talk a lot about how we implement cash transfers and whether, so we can speak for a very long time. Francesca has written a lot about cash transfers, implementation, design, how this affects the different impacts cash transfers can have on income today, but also other type of outcomes and behavior. So we can share with you the links.
And others, many others.
And others, well. Yeah. Many others in the room as well, indeed. I think, Flora, you were mentioning the issue of how, so these microsimulation tools, they capture taxes paid today and some taxes, not all of the taxes. So they capture taxes paid by individuals or households on certain, on consumption, but also on certain type of income. They miss out some of the tax revenues, but also the cash transfers can be financed not only by tax revenues, but other sources of revenues. And these other sources of revenues, you said, in some countries are super relevant and actually provide most of the funds to finance cash transfers. And this is not captured in these microsimulation models, which are very complex and have a lot of assumptions, but at the same time simplify many issues. So they don't capture distribution over time, usually, and intergenerational distribution of income. So we borrow today, someone will have to pay the interest rate, the debt and the interest on that debt tomorrow. And so these are all issues that are very important. I think there has to be more done in terms of how we incorporate social costs and benefits between periods of time, even more so now that I think we realize how important it is what we do today to what is going to happen tomorrow in terms of resources and populations, etc. So we can discuss more later, but that's what it is. And I think, yeah, I think the taxing cigarettes, I think one of the issues with this type of taxes, the excise duties, that you want to tax to increase the price so that people do less of that behavior or consume less of that good. So in a way, you may impact people that smoke a lot and so they don't want to be taxed, of course, but like as a society, you want to discourage that type of behavior because it's bad, not only for the person that cannot internalize their own cost going forward in their own lifetime, but also for the health system, for example. So I would just make that argument very clear. Then the issue of how you use those tax revenues remains and is as important, I think, whether you get this tax revenue from this type of excise duties or other type of sources. Yeah.
Thank you, Laura. Kyle, over to you.
Thank you. Laura has covered a lot of what was asked, but I just wanted to pick up on one of the points that David made, and that was the point about sometimes many low-income countries don't have a lot of fiscal headroom or fiscal space. I've been very fortunate through work on the Center for Tax Analysis in Developing Countries to be able to work alongside governments that are thinking about tax reform on a daily basis. And it's often the case when you might have done some thinking or some modeling about what would a more progressive design for a certain tax look like. Sometimes that entails revenue loss, at least in the short term. it's very difficult to go to a permanent secretary or minister of finance and get him or her to agree to something that will be good for equity, but will cost the fiscus money in the short term, because ultimately, in the face of debt distress, fiscal deficits, that can end up trumping redistributive aims, and that's a shame. That doesn't have to be the case. I think where there's more work going on tax benefit simulation models that look at the system as a whole, you can think, okay, if I change one instrument, how do I rebalance that on the other side to kill those two birds with the one stone? A more progressive, a more redistributive system does not necessarily have to mean revenue loss, but sometimes a hyper focus or an individual focus on one instrument and not looking at the system as a whole means that it might be more difficult to implement those sorts of reforms.
And Dara, over to you for any points, any responses you want to give.
Okay, so I think there was a question on tax incidence. Oh, no.
Well, specific to Ghana, so there was a question, there's some online questions that I'll forward you, and other questions on, yes, on the personal income tax, right, population.
Okay, I'm looking in the chat box now.
Tax.
Okay, do you have documentations for the micro simulation in Ghana? Yes, Michael. So if you can please put your email in the chat box, I will put you in touch with my colleagues at the Ministry of Finance, so you can discuss it with them.
Okay, and we'll come back to you in a minute for sort of concluding point. Miguel, over to you for any responses you have.
Yes, well, just maybe briefly about the case of Nigeria. No, so I think what you ask is a very important point, and I think income tax is just one tool for revenue collection. No, so I think in Nigeria as well as in other countries, VAT plays a major role. So VAT in Nigeria collects about 5% of GDP. No? So, and the poor, proportionally or in relative terms, pay a much larger share in terms of their disposable income than the richest. No? So they actually contribute to finance different social policies, including cash transfers. So they actually contribute indirectly, to the pot. But one of the things that can actually substantially improve the way revenue collection can be implemented and linked to social policy is to take advantage of the infrastructures that are built around these policies. So in several countries, for example, there is the attempts to link the tax revenue authorities with, for example, the databases and systems that exist, and also with the banking sector that is being gradually used to pay cash, or social welfare benefits, to not only to deliver cash, but also to monitor taxation. So, and of course, the people on the lower end of the income distribution, they don't pay any income tax, but nevertheless, they are in the system. And there are substantial efforts in several countries to improve and use information systems to do that. So I think there's a lot of scope. Nigeria, I know, has been very entrepreneurial in these areas. So in Lagos, for example, Nigeria is very heterogeneous too. So, but also there are things about subsidies. Nigeria has the fuel subsidy that the Ministry of Finance in 2011 tried to undo, and there were these massive demonstrations against this policy, and then the Ministry of Finance decided to step back. So there depends. It goes back to what Laura was mentioning about the political economy aspects. So usually the middle class are more upfront, they have more voice, and this also affects the way tax or fiscal systems take shape. And can I just quickly mention?
Yeah, sure.
So about Tanzania, I think this is the question about how to finance, the instruments that the government is contracting with the World Bank is a very important question. So, and if you look at the trajectory of Sub-Saharan Africa, the World Bank has been the main financer of cash transfers or social protection in general, providing about 2/3 of the financial resources. And one of the interesting things about this is that they come in the form of debt instruments, not grants, which is also, I think, positive in a way, because it means that governments are taking up ownership of these initiatives. And there are multiple things, of course, to finance those debt instruments. In the case of Tanzania, there is significant revenues coming from natural resource income. No, so but certainly, you know, going back to the systems, how you connect expenditure on these transfers and the way the country can collect revenues is very important. And but I think it's actually I see it as a positive step to internalize this into the system through that instruments rather than to get grants, and there is lack of institutionalization of these policies. No, I think it's a positive step, but I understand your concern. No?
May I just follow up on that? Yeah, thank you. And thank you. Just following on your comments. So we have had a tricky situation where like the World Bank, as you mentioned, gives this as a loan, but the initial agreement with the government, I think many countries have done that, is that they will transition that so that the government takes over. At some point, they need to be like 100% government financed and all that. But then just a few years after that agreement, I think the initial agreement was like 3 years, actually, yes, the initial phase was like 3 years. And then when we go to the next phase, they agreed on certain amounts. You are going to give this contribution amount, and then it phases out that way. But then the government failed to start implementing those commitments. And when the discussion came, even to the point where it was difficult to approve the second phase of the productive social safety net by the World Bank, the government argued that, you know, but we are already contributing because this is taxes. It will be paid by our taxes, citizens' taxes. So it kind of like when we, like there's a paper that we wrote analyzing that commitment and agreement and fulfilling that commitment. So it started well, but then later on the government said, but we are paying anyway. So this is already our contribution. And it has delayed that takeover by the government in a sense, which now worries us to say, until when are we going to get to the point where now the government is 100% financing this? Because the initial strategy of transitioning and taking over seems like it hasn't started yet. But these kind of like tricky arguments becomes difficult to understand. That's why I had asked in a way. Thank you.
Thank you, Flora. I'll hand over to Yuka for any responses to the questions and issues that have been raised in the discussion now.
Okay, so very little add to what has been said here. So, but maybe just on 2 points that Flora raised. So the donor financing. So in principle, there's nothing wrong with the donor financing. I'm all for official development assistance, and it's used for these sort of purposes. But of course, I mean, the hope is that then the recipient economy grows, and at the same time, then the relative importance of donor financing will be declining. So then it will be key to also invest in tax capacity and the donors would be wise to also invest in tax capacity then at the same time. And maybe also the second point is then related to the social contract and the willingness to pay. So certainly that's key. However, there are also some more technical issues in tax that don't really rely on that social contract. So, and the withholding taxes are examples of these. So typical employees in advanced economies have very little leeway in terms of avoiding the tax because it's withheld by the employer. And if this is to increase, if this share is to increase in the developing countries as well, then that would be one way of broadening the tax base. And maybe there's then some sort of cycle from that necessity to pay the tax to also more investment in terms of monitoring on how the money is spent.
Thank you. So I'm mindful that there's a lot to say. I'm certainly containing myself, but I'm also mindful that we're eating into the break time. So I do have to ask a final question. This is a chance for a final plea or message by our esteemed speakers. just a one pointer, a 1 minute max pointer on if there's one thing you would fix or change to the tax transfer, and it's a bit cruel question, but tax transfer system to make it more equitable, what would that be? And I'm going to start with Yuka, because
Oh, okay.
what would that be?
Yeah, this is unfair. So I mean, but I would like to raise one point that was briefly touched upon, but we haven't spoken much about it, namely the quality of public services, in-kind transfers, and especially education, because I'm very worried about the poor education results, and having those sort of skills is key for people to be productive workers, and without productivity, then there won't be lasting impacts on the living standards of the bottom of the distribution. How to do that, I'm no expert, but I just wanted to raise it here.
Thank you. And Dara, over to you.
So there's actually a question in the chat box, and I don't know if you want me to answer it. It's on the e-levy.
I think we'll have to answer that another time. We can.
Okay. So the one thing for me is, I think it will be to better target people who are most vulnerable. I want us to start using technology to improve our identification and addressing system so that we can target only people who are most vulnerable and ensure that they're taken care of. Because that will make a cash transfer system more efficient, but also a way for government to save money. Like I mentioned earlier, the current pro-poor intervention system, pro-poor interventions mean that people who are even well off benefit from these interventions. So in the 2023 budget, for instance, the amount that was allocated for free senior high school was 2.9 billion cedis, and 2.9 billion cedis is the equivalent of about 200 million pounds. And everybody who, even people who can afford it, are benefiting from this intervention, right? But if we better target people who are most vulnerable, governments can also save some money, and then this amount can be used towards other crucial development objectives, while at the same time making sure that people who are vulnerable are taken care of. Thanks.
Thank you, Lara. Miguel, over to you.
Well, thank you. So I think just for me, I think it's important to improve, for example, information systems to connect expenditure or the revenue side to the expenditure side. There's a lot of work to do that, and also improve the coordination or the international coordination to deal with tax evasion and tax avoidance that we haven't discussed much. But I think it's a major source of revenue, which includes tax loopholes that exist across the board. No? So I think these are maybe the main.
Thank you so much.
I think you have already said so many of the important things. I'm a bit obsessed with the importance of taking the system, thinking about the system as a whole. And I think there is so much scope to improve each of the instruments while you think of the system as a whole. And I actually didn't mention much about VAT, for example. I think VAT is underutilized everywhere as a source of revenue, efficient revenue source to finance investment in education and in health that is usually very important to reduce income out-of-pocket expenditure, particularly relevant for lower income households, but as Yuka said, is also investing in opportunity for tomorrow, like workers, etc. So I think you can think of removing many exemptions, for example, exemptions to food and other goods that are thought providing exemptions to VAT targets poor households, but actually most of the revenue forgone accrues to the richest households. And that's such a waste of public resources when we have so many other instruments to target these more vulnerable households better. So again, system as a whole for me, don't work in silos.
Point taken. And Kyle, any final message from you?
Probably one final message is in the design of tax and transfer policies, adhere to certain principles. So don't, for example, as to go back to the example I mentioned, don't, for example, design a personal income tax that makes the poor poorer. You create disincentives to enter the formal labor force, and that has implications down the line for the fiscal contract, et cetera, et cetera. So you can adopt some very straightforward, simple principles and try to adhere to those and ensure that you don't make the poor poorer by wanting to declare or formalize.
Thank you so much. So I think already from this final, pitch, 5 points we've had, we already have a lot to take forward and work on. But first, let's have a break before we come to the next session, which will be specifically on gender inequality, a really important and exciting topic. So we'll take a 10-minute break. For those of you that are online, please stay tuned. You'll see a banner, but we'll be leaving the room briefly and then coming back. Thank you so much to our speakers. We hope even that you're online, that those of you that are here, you'll stay on for the next session because there are important links here, of course. And we hope to take the conversation forward altogether. Thank you.